Rise and shine, rise and shine, rise and shine. Top of the morning, top of the morning, top of the morning, top of the morning. Come on, I'm just playing, I'm just playing, I'm just playing. But we're gonna get to it this morning. Man, it's already been a great morning. I can't even lie. I was up an hour ago, about an hour and 10 minutes ago, actually. Getting to some other stuff, some really important stuff. Not gonna get into it yet. But yeah, it's been a great morning already. But we'll get into these charts this morning. We're gonna get into these charts this morning. I was patient last night. Let me refresh my screen. I was patient last night. I was up, thought about taking an entry. I saw this drop right here. Didn't bite at taking the sale, right? And I'm gonna touch on why. I always root these calls when we're on live. We're always rooting our lives in the fundamentals, right? Always rooting our lives in the fundamentals. The technicals are just the the boundaries for us to execute or not execute. But those technicals allow us to take higher probability trades when they're in line with the fundamentals, right? So I'm going to touch on where I'm seeing the fundamentals at right now and why. I'm never just going to share my opinion or my bias or what I'm seeing. I'm going to root it in fundamentals so you can actually have a foundation to challenge what I'm saying up against. I don't want you to take my words for anything. I want you to take what I'm saying and go fact check it, go double check it through because we have historical evidence for the relationship of price and fundamentals. We have historical evidence. Now, does that historical evidence give us the ability to predict in the future? Absolutely not, because everything is uncertain. We don't know what's going to happen in the future. However, we can increase or decrease the likelihood of something happening in the future based on how it has happened in the past and how many times it has happened that way, right? Don't miss what I just said right there. That little 30 seconds, that is something you can hold on to for real, for real. But I didn't take the sale, right? And then I was looking on the charts again. I saw price respecting this 15-minute decision making level, and I didn't take the sell, right? Because I was being patient. But there's a few reasons I'm gonna tell you from a technical standpoint of why I didn't take the sell. If you were on with me last Tuesday, I talked about this RSI, right? And I've been loving this RSI so far because it's provided more clarity for me for what I'm trying to use the RSI for, right? I just want to understand, okay, based on where price currently is relative to where it was in the past and where it's been in the past historically, is seller stronger or are buyers stronger? Okay. That's what I want to know. And then based on where the relative strength of, like, down here, right? When I see it down here, it's like, okay, we have been oversold. Sellers have had the strength relative to buyers given the historical records, right? And so that's what I wanted to use the RSI for. And it's been working exactly the way um it's been guiding me. I'm not gonna say it's been working because that would presume that it doesn't work, which that's just not accurate. It's no. But it's been guiding me in the way that I wanted to guide me when I'm looking to take an entry. Okay. And so that was the main thing that I was looking at, to be completely honest. I don't like saying to be completely honest because that presumes that I'm not being completely honest other times. So there's 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 words in my vocab and phrases in my vocab that I'm removing because it just doesn't need to be there. It doesn't need to be there. But that is what has guided me to not take any type of sales during this period, from a technical standpoint, because the fundamentals, in my personal opinion, and this is stuff when I talk about it, you can go fact check it and validate it, but are supporting safe haven demand. So they're supporting gold moving upwards. And I know we've seen all-time highs on gold, and people are looking at the charts like it has to drop, it has to drop. Gold doesn't have to do anything. Price doesn't have to do anything. Price is going to do what price wants to do. And just because we think it should do something, that doesn't mean it's going to do that just because it's at all-time highs or it has been at all-time highs, right? And so I was looking at, and when I talk about um, that relative strength index, I was looking at sales, not trying to take the sale, but just seeing how price responds with this RSI, right? And so the lower we are, of course, on this RSI, the more risk associated if we chase trades towards the downside, right? So the lower we are, the more oversold we are on this RSI. If I take a sell, I'm not, there's only so much room that I'm allowing price to move before like this RSI is down here. You know what I'm saying? Like before it's down here. And when we talk about the relativity, we're talking about where is the RSI relative to where it's been in the past, and how, like if we just go and we just look at this price action, the lowest point of this RSI is right here. That's the lowest point. And so we see every time since this point right here, every time it's reached that level, what has it done? It's bounced back up. It's bounced back up, right? It's bounced back up, right? Every time it's reached that level, it's bounced back up. And so that's what I mean. And that's the meaning of relativity. And it's a guideline, right? For us. And so the lower the relative strength index, the lower this RSI, the more risk there is to chasing trades to the downside, right? And so if ideally I want to catch the move within the middle, right? Or like how it is right now, where it's coming off the bottom and it's trying to potentially head up. Like that's where I want to execute within that, right? Within that threshold. But from a technical standpoint, that along with, of course, my decision making levels, were reasons that I didn't take the RSI was the reason I didn't take a sell. And the fundamentals was the reason I didn't take a sell. Okay. So why did you take buys yesterday? First of all, because of my decision making levels. Because of my decision making levels. Actually, not first of all, first and last of all, because of my decision making levels. If we see price right at this level, we didn't get any clean breaks of price at this level, right? We didn't get any clean breaks of price at this level. And you see that my VXT entries are not even close to present at this level. Now, I did scale down to the 1 minute because I've talked about this on previous live sessions. I did scale down to the 1 minute, right? And I was eyeing an entry right in this area. Right in this area, I was eyeing an entry. But why didn't I take? Because we were moving on this decision making level, right? By the time we got to this level, I was looking at, okay, let's just think about what is the probability of where price currently is relative to where the RSI currently is. Let's see if it goes up. And I was just looking, I was just like, okay, let's see if it's going to continue to go. And what ended up happening? The decision making level did its job, pushed price down. You know, it was that force field like nature on price, which also gave that RSI opportunity to come down, which I'm okay with seeing. But the communication between price and any indicator you use, like this applies to any indicator you use, but that's what I'm looking at, right? When I'm trying to recognize, not trying, when I'm recognizing patterns. And that is the type of stuff I'm looking for. I'm looking for the association price has with my indicators, the association price has with my levels, right? I'm looking at those things. So I decided to not take a sell, of course, because of the RSI, because of the fundamentals. I didn't take a buy because my confirmations weren't present. And the risk for me to chase a buy was high because of the RSI and because I was trading on a level, right? So those were the four reasons, two for each. The reasons why I didn't take buy or sell last night. Um, and you're probably thinking, okay, why didn't you take a buy right here? Why didn't you take a buy right here? By the time that I was looking at taking buys, look at my RSI. Look at my RSI. Like at the time when buys actually came in, look at my RSI. And yeah, you're probably thinking, okay, well, you could have took the buy over here. Okay, yeah, I could have. But if you think about the time of day, this is the back half of New York session. 2 hours away where my cursor is right now, 2 hours away from market close, right? And so the risk associated with that is not greater than the reward potentially for me personally. It could be different for you. Like this move here, 12.15 in here, maybe you're okay with 36 points and that being the maximum amount you can profit. So basically what you're telling yourself here is I have to profit all of this movement right here, right? And so you would have had to catch it right at the top to close your profit, or 30 minutes later it was gonna be cooked. It was gonna be cooked. And so I'm always calculating the risk to reward. I'm always calculating the risk to reward. The risk to reward from a dollar amount and the risk to reward from a probability standpoint. How how probable is this? And if it's less probable, how great is the risk to reward? If it's less probable, but the risk and reward, let's say it's a 100 to 1. If this is it's less probable, right? But I have 100x more that I'm gonna earn from this opportunity than the one that I'm gonna lose, right? So just think about it like that, right? That's how I'm calculating risk to reward and probability. If I lose $1, right, but I have the potential to make 100, but it's less probable, I may take that risk. Absolutely. We're looking at a 100 to 1, right? I may take that risk and it's less probable, right? But I want to get myself towards where I know, okay, this is high probability and my risk to reward is 3 to 1, 4 to 1, 2.5 to 1, right? That's where that's the sweet spot I'm looking to stay in, that I'm gonna stay in when I execute, is that level when and just all that saying, I'm always thinking about probabilities and risk to reward. I'm never just thinking about one in a vacuum, right? The whole picture works together. Um, and so those were the two reasons why I didn't take buys. I dropped two reasons why I didn't take sales. And I hope my camera was showing this whole time because I just clicked on the YouTube and the chat, and I'm gonna be upset if my camera was not showing. But I'm gonna hope that my stream was working correctly because I was going in right there. And even if you couldn't see my screen, I hope you were able to pull some takeaways from what I was just saying. Because now I'm gonna get into it in terms of the fundamental aspects. Like I said, I'm gonna always root these lives in fundamentals. My decision making is rooted in fundamentals, right? And so, what has been going on? What has been going on? And so, the first thing that we can do to figure out what has been going on is we can go to rooters, right? Go to rooters. We click on the markets tab. and let's just see what's the hottest talk, right? So let's see. Morning bid, AI doom, and tariff gloom. Tariff talk. I expected tariffs to be somewhere on there, right? If you guys didn't see, we saw that the Supreme Court had struck down the tariffs that Trump had already put in place, negotiations already put in place. I know there's negotiations within that went on a different law. Like I don't know that law. I forget the number. I heard it in the press conference that Trump had. But the negotiations that took place, the trade deals that happened, the Supreme Court basically declined everything that he was doing. I don't know if they delegated it non-constitutional or whatever the case may be. The thing is, they declined it, basically said you can't do this, right? And so there's about $115 billion in tariff revenue that there was nothing actually said that they had to refund them. Or when I was listening to the press conference, it was just interesting because Trump was basically just like, yeah, they didn't put that in there. For somebody asked the question like, that with that $150 billion, like, are you gonna refund that now? Like, what are you gonna do with that? He's like, well, they didn't put that in there. You know what I'm saying? And so like those, it's. I was talking to one of my boys the other day about this, and it's like it's just funny when you start looking at. It's not funny. I'm not gonna say it's funny. It's fascinating when you start looking at this stuff from like a game, right? Because everything is a game. Business is a game. Personal development is a game. Like you're playing against yourself, right? Like when I say a game, I just mean the strategicness and the chess like nature of this type of stuff. So like when I think about it, that's how I was viewing that press conference. I'm like, okay, because they struck the tariffs down, right? Trump was, of course, saying people are asking questions. They didn't really put anything in there about the refunds and whatnot. But that's an uncertainty piece that's looming over the market. What is going to happen with that $150 billion in tariff revenue? Oh, does that mean prices are going to go up now because we lost tariff revenue? Oh, does that mean this and that? You know what I'm saying? Like there's all these things from an uncertainty standpoint looming over the market because of that one piece, right? But then Trump came back and basically said, I'm going to put a global tariff down, right? And so there was a global tariff placed, and I believe he put it at 10%. And then hours after the, the press conference, he raised it another five. So if I'm not mistaken, which you can fact check me on this, there's a 15% global tariff, right? And what I thought was interesting, and so when we talk about uncertainty, uncertainty is at an all-time high right now because nobody knows what's going to happen with the previous tariff revenue, and nobody knows how this new structure is going to impact going forward. But if we can take the tidbits of what is given to us and then do our research, we can have an idea for how this could actually unfold, right? Um, and so it was one thing that was interesting when I was listening to that press conference, and I forget what day it was. But Trump was talking about the countries that we have agreements with already, and they were basically telling him that, I'm just paraphrasing, of course, but they're basically telling him that we hope that you win the case, or yeah, we hope you win the case against the Supreme Court, because if you don't, you're going to be able to charge us more money, right? There was, like, he said that he brought that example up for multiple countries that have already had agreements with us that have said that. I believe India was one of them, if I'm not mistaken. I could be wrong, but I believe it was one of them was India. But I just thought that was fascinating, right? And so while we understand the market has no idea what's going on over here, right? They don't know how it's going to impact the dollar. They don't know how it's going to impact prices. They don't know it's gonna how it's gonna impact our relationships with countries, right? Like the 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 market's looking left, we're looking right, right? That's how I approach it. The market's looking left. I'm interpreting what the market is feeling because sentiment impacts the market, right? I'm interpreting what the market is feeling, but I'm in my own lane interpreting this and defining my own approach. I'm not doing stuff based on what the people are doing. I'm doing stuff based on what I've studied, what I understand, and what I observe, right? And so because of that, safe haven demand is at an all-time high because of that uncertainty. Because of that uncertainty, right? Safe haven demand is at an all-time high. We think of I haven't brushed up on the latest US and Iran conversations, but we think about the things going on in the Middle East. I talked about this last Thursday with the Strait of Hormuz being partially closed, right? Strait of Hormuz was partially closed, a waterway that produces 20% of the world's oil. All right. So just think about that. I don't even know how many people there are in the world, right? There's billions. We're talking about 20% of the world's oil, and this waterway was partially closed. Now, the homework for last Thursday was, what does partially closed mean? Right. And so that's something that we need to understand. What does partially closed mean? Because if it produces, if it supports 20% of the world's oil, and partially closed could mean that means 10% of the world's oil is restricted now, right? And so once again, safe haven demand that increases safe haven demand off the rip because it's fear. Remember last Thursday, I talked about there are two environments that gold thrives in. Two, policy driven, right? And what do we use to look at a policy driven environment, right? What do we use to look policy is affecting price movement? CME FedWatch tool, right? This tells you the expectations for Fed rate cuts for the next meeting. So we have our next meeting March 18th. Was that 3 weeks, 3.5 weeks? And the expectation for the Fed to cut by 25 basis points is at 4.1%. This was at 4.9% last Thursday, right? And so it's falling, and the likelihood of no rate cuts is becoming almost for certain. And you guys are probably thinking, well, how do you know? Why? How do you know it's for certain, right? Based on what that's saying, I'm going to tell you because historical. I've said this before. If you guys heard me say it before, I apologize because I'm probably going to say it another 363 times after today. But you can't hide anything in trading. That's what I love about like the approach that we take. And I'm so grateful. Like I've been a part of other trading communities. I've been in the past, like when I first started trading, and I'm so glad that we took the steps for ourselves because I love our approach. Why? Because you can't hide the facts of the fundamentals. You can't hide the facts. You can't hide it. It's just because we're playing a game that all the big corporations and countries and private investors want to win. The game we want to win the same game. We ultimately want the same thing, right? Now, some people let fear, uncertainty, and doubt rule their decision making, right? And those people lose the game, quote unquote, right? But it's I'm gonna just leave that there. Because y'all know I be going down rabbit holes, and I be going down good rabbit holes. They're always good rabbit holes. But let me come back to the surface. And so the reason I was saying about the how do we know that the likelihood of that CMA, how do we know likelihood of the CME Fed Watch tool to actually be a good resource for us. Because if we look at the historical records of Fed rate cuts, only 4 times since 2007 has the Fed done something different than what the market already priced in, not priced in, than what the market already expected. And this is what the market expects here. So only 4 times in and not in history, excuse me, only 4 times since 2007, because that's as far as that Forex Factory lets me go back to. Only 4 times since 2007 has the market done something, has the Fed done something different than the market expected, right? And so when we talk about probabilities, yo, let me do some math real quick. So that's 19 years, right? And there's a total of, we can look right here, right? March, April, May, June, July, or excuse me, March, April, June, July, September, October, December. There's 7 more cuts this year. There's a total of 8 rate cuts, maybe 9 if I'm not mistaken. 8 or 9. So let's go with 8. I'm pretty sure there's 8 rate cuts in each year. 8, excuse me. I gotta make sure I'm using clear language. So if y'all hear me reverse on anything I'm saying, it's because I want to make sure I'm using clear language. There's 8 rate cut meetings. There's not 8 rate cuts a year. There's 8 rate cut meetings a year. Multiply that by 19, right? 152 meetings since 2007, and the Fed has only done something different than what the market has expected 4 times out of 152. 4 times. When we talk about probability, that's a high probability of us being able to interpret what could come, right? And so why is that important? Why is that important? Because what did I say? 2 environments that gold thrives in. Policy, and we just saw that policy is not in favor of safe haven demand, because when rates are up, when rates are up, gold is down, right? When rates are up, gold is down. When rates are down, gold is up, because it's the return on investment that private investors, corporations, traders, so on and so forth get on their capital, right? So they want to yield a higher return on their capital. And since gold doesn't pay a yield, you simply earn from the store of value increasing. If rates go up, that helps yields, which can be invested through dollars, right? And that's where people put their money, right? And so policy driven, one aspect that gold thrives in, and the other one's fear driven, right? So when we talk about the Strait of Hormuz, we talk about the uncertainty from tariffs. We think about Greenland come June 1st, right? Denmark, right, is in Europe, and we're trying to take Greenland. So you can see why Europe and NATO countries are not really like bought into the US taking Greenland. All right. And so some homework for you guys to do. As we move closer to June 1st, because and I'm gonna do some homework on my end as well. But as we move closer to June 1st, if we think about it in the light of chess, right? What levers can be pulled away from NATO countries to incentivize them being on board with US taking Greenland, right? What levers could be pulled? Could it be sanctions on certain things that we export to these countries, right? Could it be increased tariffs on certain things. Like you just that's just it's you can literally go to ChatGPT, you can go to Gemini, you can use deep research functions and ask it insightful questions. But the question is, what levers can be pulled to influence NATO countries being on board with US taking Greenland? Because why is the US taking Greenland so important? Because of rare earths. And nobody wants to be under the thumb of China anymore. Nobody more than the US, at least. Right? Especially with where we're trying to go with our economy, right? Nobody wants to be under the thumb of China any longer. In rare earths, we know China has a damn near monopoly on rare earth material, on rare earth minerals, right? And we've already signed a deal with Australia for rare earths. We already signed a deal with Ukraine for rare earths. And I thought there was one more in there that we signed a deal with for rare earths. But for sure, we got those two deals already, which are alone like 1.5 trillion, I believe, um, in rare earths, right? Whatever that measures to in tons or whatever the case may be. But um, those are like as we move in closer to June, that's going to become more and more in the scope of what the market is focused on, right? It's a little far out right now. So when I go to look on Reuters and I go to look on TradingView and my news articles and my Forex Factory news articles, I don't see much talks about Greenland. And so that's why we always got to be doing our own due diligence because those talks are going on, right? Like that, those pieces are being moved even though they're not in the market headlines yet. And my only um, speculation that they aren't is just because it's still another 3 months away. But I think, halfway through March, towards the end of March, those talks will start to come back up and pop back up. But once we get into April and through April and May, like those talks are definitely going to be front and center because a decision is going to be made in June, right? We're not going to wait till June to start talking about this. Um, and so the reason I'm saying all that is because these are all the fundamental drivers that impact price. When you hear the term pricing it in, the market is pricing it in. That is because the market expects something to happen in the future based on the fact of the fundamentals. And so the market acts immediately. The market doesn't wait. The market acts immediately, right? And so that's something that we can hold on to. We can hold on to that. Like even the move that we've had since the 20th, right? We Everybody's saying, oh, it's just man, we can even go back a little bit further than that. 20th down here, right? We take a look at here to here. That's 193 points of movement. That's a lot of movement. And that happened all on from February 20th to today, right? February 20th, when was that? When was that? Let me look at my calendar. Was that Thursday? That probably was, that was Friday. So what happened on Friday? Let's look and see what happened on Friday. Trump speaks. I'm pretty sure that was the day the tariff stuff came out. And so we also had bearish news within the manufacturing and services industries sectors. And then we had a very weak GDP quarter over quarter, right? And so when I say the fundamentals, the fact of the fundamentals drive the market, this is what I mean. This is what I mean. There was a point in my trading career where I would see large drops like this and really not know where they came from. Or I would see large moves upwards like this and really not know what was causing them. But the fundamentals always point us somewhere, right? And in this situation, this type of move, this was simply just manipulation because the fundamentals are saying the other thing. The fundamentals are saying price should be going up, right? And so if I see price doing this, because manipulation, we know accumulation, manipulation. I think there's one more that I'm literally just completely missing right now. I don't know why I'm not thinking of it. Distribution. I don't know. It's so funny when I was thinking about where that was in my brain. Like I was really going to look for it. I was really going to look for it in my brain. Um, yeah, distribution. Appreciate you in the chat. See, we was on the same wavelength. We was on the same wavelength. Um, but yeah, accumulation, manipulation, and distribution. I realized I wasn't sharing my screen. My bad, my bad. But like this was manipulation. This was accumulation. Have we distributed yet? We have not distributed. It those three phases are gonna happen. It's just a matter of time when it does happen, right? And so manipulation is always going on. There's always a phase of accumulation, and then there's always a phase of distribution. Fundamentals follow distribution. Fundamentals don't follow manipulation because fundamentals aren't manipulative. Fundamentals are fact. Fundamentals are what's happening, right? Fundamentals are what's the actual force behind the movement. And so I personally, and this isn't absolute. This is why I said go do your research, go do your due diligence. This is how I think about it, right? Fundamentals are distribution, right? Manipulation and fundamentals can't go together because the fundamentals are the fact, right? And then accumulation is just simply a period in which you need to be patient. Accumulation is a period where you need to be patient. So, um, man, man, I just love I love the chart so much. And here we are getting this drop here. And what am I not gonna do? I'm not gonna jump at it. Why? And then I'll come back to my thought about why I love these charts. I'm not gonna jump at it for two reasons. Number one, from a technical sense, I'm gonna touch on a technical sense first. I got this 15-minute decision making level here below price. So if I think about that price to there, 45 points. That's actually a decent movement. I would actually take that because that is enough for I trade normally one contract, so that'd be $450. And then I would scale in the moment we broke this decision making level if the factors, mainly the fundamental factors, supported me for price continuing to move down, right? Um, and so that was decent movement. But the other reason why, from a technical sense, I don't like sells is this RSI, right? Look at the RSI relative to where it's been in the past, right? And so if we just look at price, the RSI right here, we can agree that that is not a lot of space from here to here on the RSI. That is not a lot of space. And one thing we don't know how much price movement can can be actually covered in that space. That could be one candle, that could be two candles, that could be three. You know what I'm saying? Like we don't know actually how far down price will go to cover the level to for the RSI to go from this level to this level. We don't know how much the candlesticks, the price would maybe it does go to this level. Maybe from current price to this decision making level is the same as from this level of the RSI to this level, right? We just don't know. Those things we don't know. And so this is when I associate when I think about probability and risk. I'm associating the probability not being very probable that we continue moving downwards because of its relativity in the past and what it has actually done historically, right? And the risk to reward, All right. When I think about the risk to reward, and I know we're getting some, prices correcting a little bit, but it was good to touch on. When we're thinking about risk to reward, right? My exit confirmation, I have two different exit confirmations, and I'll just briefly go through them real quick. So the first primary exit confirmation is when this lagging line, if you guys are familiar with the Ichimoku cloud, the lagging line crosses lead span B. So crosses this blue line. That's exit confirmation number one, right? And so if I were to just take that as my stop, because I set my stop loss there, like that's where my stop loss would be, right? And so if I'm taking a sell and I need and to be invalidated on this trade, the lagging line crosses lead span B, that would be me risking 35 points to gain 48. So I'm risking $360. We're going to round to the nearest tenth on that 35.7. I'm risking $360 only to make 480. I don't want that. I can be patient. Guys, one thing we have to realize too about trading is not taking trades is executing. I'll say it again. Just because you don't take a trade, you're still executing. You're still working on up here. You're still working on your discipline and your patience. And you're removing any feeling of FOMO by intentionally not executing on something. Right? Especially when you root it in a reason. And not because you can also say I'm not executing because I'm fearful, right? No, I'm not executing because the risk to reward doesn't make sense and the probability is not likely and the fundamentals aren't in support of that trade. That is why I am not looking for sales. I don't care if price just fell out of the sky right now. I don't. I truly don't. There was a period of time where, guys, I would chase like JP Morgan. I would chase these trades like JP Morgan. But I've gotten so much better. And I was listening to this video um, from a guy named Jesse Livermore. Well, it was somebody that narrates Jesse Livermore, right? And he said, "You are 3 to 8 trades away from becoming the trader you know you can be. 3 to 8, 3 to 8 in a row. In a row. That's a particular nuance. 3 to 8 trades in a row from becoming the trader you know you can be, right? And so, from a risk to reward level, I don't like this sell. From a probability standpoint, I don't like this sell. And from a fundamental standpoint, the fundamentals, in my humble opinion, don't support gold moving downwards. Okay. So that's why I'm not going to take that sell. But that was exit confirmation number one. But then I have a second exit confirmation where I use my decision making levels. And just and I always take whichever one has the least amount of risk, right? Within my risk management system. So I only like to risk $250 per entry. So this trade actually wouldn't even qualify. I wouldn't even be allowed to take this trade because it's $100 more than what I'm willing to risk on each trade. And then if I got into a state of FOMO and a state of hopefulness, right, then I would have put my stop loss here and I'd be risking $500 only to win 580. And that math is absolutely not mathing at all. And there's no way that I would be able to be a profitable trader if my risk to reward is less than even a 1.0. Like, if my risk to reward is less than a 1 to 1, there's just no way that I can be a profitable trader, right? It's just not possible. It's math is math, right? Like math can be projected. Okay. If I take, let's say I take, let's say I take 5 trades and I profit $400, but I lose 500 when I do lose, right? Or let's say 6 trades, just so we got an even number. 50% of those I lose, 50% of those I profit from. When I profit, it's 400 bucks. So that's what? Three trades, 400, that's 1200. But when I lose, it's 500. So three trades, 500, that's 1500, right? I'm still in the hole negative $300 on a 50% system, which I don't know if you guys are on. I don't know if you guys are on last Tuesday or Thursday. I forget which day it was, but I took 14 L's in a row, and my account I didn't blow my account. I'm still in the same account because of my risk management. My average loss is $95, right? And so the win probability, the win probability is very unimportant. Like your percentage of probability, just to say you got an 80% system, that doesn't mean anything to me. What is your risk to reward like? What is your win to loss ratio? When you win, how much do you win? And when you lose, how much do you lose? Those are the important numbers to pay attention to, right? But because I mean, you guys probably have seen stories. There's people with 20% trading systems that are significantly profitable, right? Now, of course, I prefer my probability to be higher, right? But that's not the number that I'm chasing, because if that is the number that I'm chasing, what am I actually chasing? I'm chasing the want to be right. I'm saying, "Oh, wow, I want to be right more." And that's not the game. I don't care to be right more, right? I want to win, right? I want to win the game in the long run, right? You know, mama. Go back into bed with mommy. Where are you seeing this chart now in regards to, like, where am I looking at it, or what am I seeing? Like, where am I seeing gold on the chart right now? If you can answer that, I can answer your question. I need to be better with pulling up the chat. Um, you just left that comment, but yeah, the fundamentals, root the thinking in the fundamentals, understand the risk, understand the probability, do your research, do your due diligence, guys. There's so many sources out at our fingertips that we can acquire knowledge, right? And I was just thinking about this the other day. Knowledge is knowing what? Knowledge is knowing what? It's knowing the information. It's knowing what you're talking about. Like, you know what a topic is because you have knowledge. Understanding is knowing why. So you know why that knowledge is important, why that knowledge means what it means, why that knowledge is applies to this scenario or applies to that scenario, whatever the case may be. Like, knowledge is knowing what, understanding is knowing why, and then wisdom is knowing how. You can't have wisdom, you can't understand how to apply the things. And in this conversation, the things being the fundamentals, really. Like, the fundamentals changed everything for me. It put everything into perspective for me. And it allowed me to work on my patience and my discipline and my consistency and my execution and my risk management. It allowed me to work on all those things. Like, the moment I really went headfirst into focusing on the fundamentals, right? Because I'm patient. Like, I don't take unnecessary risks, right? Just because like that trade right there, it looked good. Like, per my VXT confirmations on this black candle right here, on this black candle, even back up here, I can just see where a trade came in. Per my VXT confirmations, I had an entry come in on this 515 candle, right? Lagging line below price, lead span B sloping downwards, and we were moving off of this mid portion of the RSI. So I had some room for price to move downwards. But I was not taking sells at all because of the current fundamental landscape of gold, right? And I've gotten myself in, and trust me, I'm not gonna sit here and act like I execute perfectly over the lifespan of my trading career. That is not the case at all. I've made the mistake of trading against the fundamentals and lost big. I've made those mistakes. I've blown accounts from doing that. I've blown accounts from chasing trades. I've blown accounts from not staying within my risk management rules. I've blown accounts from not following my system. Like I've I've been through that. So like why I get so passionate when I talk about it is because I literally have seen it change night and day. Like when I do exactly what I know I'm supposed to do, the results speak for themselves. The results speak for themselves. And does that mean I'm going to win every trade? No. Doesn't mean I win every trade. But it means I actually get to continue playing the game because my counts aren't blown. Like like I understand it's a game of probabilities. When I lost 14 trades last week, I understood that was it's just a game of probabilities. And I if you go to the video on Tuesday, there's a link in the description. You can click on it. It'll take you right to our trading community. Our trading community is completely free. We have a free side of our trading community, but on that free side, we share our profits and lessons, right? And I did a video on exactly what I'm telling you guys about the 14 L's that I took in a row. So if you need some encouragement because maybe in a losing streak, and I also did it, there's also a YouTube video talking about losing streaks, right? Because I've been there, right? It wasn't the first time it's happened, but my mindset this time that it happened is just completely different. It's just completely different because I understand. I understand. Like it's strictly a game of probabilities, man. It's strictly a game of probabilities. And so we got about a few minutes left on this call. I'll close it up at 7 a.m. on the dots. 7 a.m. on the dots. But as far as what I'm looking for, right? As far as what I'm looking for, I'm ultimately waiting for price to break this decision making level. That's ultimately what I'm waiting for. I'm not going to chase any trade to that level, right? 56 points. Let's see what this look like on the 1 minute. Nope, I don't want that. 33 points. I'm good on that. So ultimately, I'm waiting for price to break this 15-minute decision-making level. It may not happen in this session. It may happen in this evening session. It may happen in tonight's session. It may happen tomorrow morning, right? We don't know, but that's what I'm waiting for. I'm ultimately waiting for a price to break this 15-minute decision-making level, and I'm going to look for something like this. And I love trading off of my levels because of where I can put my stop loss. Like I'm I'm able to get a really not just a tight stop, but a strong point of invalidation, right? So I am literally looking for something like this, right? I'm looking to catch this move, and then let's do this actually. Let's look and see what is between this level and this level. Okay, we have this decision making level. Oh, actually, that doesn't look like a decision. I'm looking to see what's between these two levels because 200 points is a lot of points, right? But we do. Ooh, oh no, that got filled right there. Okay, hold on. Look at this. We do have this area of imbalance right here, right? We got this area of imbalance right here. That price has not touched. And then we got this area of imbalance right here. That price has not touched. Oh, okay. So this is target number one. I want that first area of imbalance. That's target number one, is that first area of imbalance. If I scroll down on the 15 minute, If I find another decision-making level at this area, that would be so money. That would be so money. If you don't know, my decision-making levels are my three candle structures. Three candle structures. I'm looking for something in this level of price, but let's see if there's something over here because, like I said, these levels communicate together for a reason. These levels communicate together for a reason. I don't see anything at this level either. And so let's try the 1 hour again really quick. Decision making levels. Nope, I don't got my decision making level in that area. That's cool. So yeah, that's my target though. That's my target is that first area of imbalance. Right? Oops. Oops. Babe. Yeah, I actually gotta hop off, y'all. Little girl crying. Gotta make sure she all good. So like I said, that's what I'm waiting for. I'm waiting for that buy. Fundamental support, gold moving upwards. Um, control your risk, control your mindset. Don't chase your trades. Appreciate you very much. I see you in the chat. I appreciate that very much. Um, absolutely, like I love the charts. I love this game, and I love being able to share just what I've experienced and what I'm continuing to learn with you guys here on YouTube. So appreciate you. We'll be back live on Thursday. Thursday we'll be back live. We'll put the premiere before so that you guys can set the notification and whatnot. But we are going to bloom together. So I appreciate you guys joining this and everybody that will watch this. If you got any comments when you want to share where you are in your trading journey, please drop it in the comments. I always love hearing about where people are because, like I said, we've been there. We are still on the way to where we're trying to get to. So we have not arrived yet by any means, but we will definitely all reach that peak. But for now, hope you guys have a blessed day, and I will catch you guys on Thursday. Peace.